Hello everyone, welcome back to the channel. I am a few days late for October here. I've had a busy couple days, been a little bit under the weather for the past 2 days, maybe a sinus infection or something. So if I sound a bit different, just I'm on the other side of that now. Been delivering firewood the last 2 days. So basically sold everything within a week that I had in inventory that I had cut all year and let it season. So I've been doing that, made about $1,200 just selling that firewood. So kind of a cool side gig there. But it's time for October 2025 net worth update, and some things changed this month. So we'll see what happened there. First thing I wanted to do is I was one of the people that filled out the Money Guy survey, one of the 25,000 people that filled out the survey. So if you haven't seen their YouTube channel, I do watch them a lot, along with Dave Ramsey. I'm here and there with Dave nowadays, but I do like Brian and Bo. They're on the Money Guy show, so very good resource. A lot of very high net worth individuals watch the show. They've got some great advice and very interesting and entertaining as well. So they recently did a survey, I believe it was 2 or 3 months ago, maybe consisted of 40 questions roughly. And as I said, I was one of the 25,000 people that filled out the survey. So I am one data point in this result, but I did want to just quickly, for a couple minutes, just go through what the results were and how I compare to some other people who have taken the survey. And note too, so they have a definition of a financial mutant, which is somebody that is essentially well beyond the net worth that they should have at their age group. So I am definitely in the financial mutant category. And I do want to compare myself to how the other financial mutants are doing. So we'll see that here in a second. So where did most of these people go to school? Most of them went to public school and college and got their undergraduate degree. This is also true for my wife and I. We did go to public school all 12 years. Both my wife and I went to college as well. Both of us hold our master's degrees. Hers is in business and mine is in leadership and quality assurance. But yes, both of us went to public school. So second question here, is credit card usage okay? And 97% said that yes, absolutely people can use credit cards, but 99% of financial mutants said that no way, no credit card debt under any circumstance, which, right now at 30% interest on a credit card is just crazy to think that, yeah, having a balance on your credit card, it would become a trap very quickly. So thankfully, I've used credit cards for the past 13 years. I have yet to ever have a month where I've not been able to make the full payment. And so I am always like for example, this month we spent $5,000 on our credit card. We made about $24,000 take home pay. And so, the income is significantly more than the expenses going out. And if we've ever had a month where that's, not going to happen, I definitely would not put it on a credit card or rack up credit card debt. So I do completely agree with this as well. I'm perfectly fine with everybody using credit cards. Just please, please try to avoid carrying a balance on those credit cards. So how long do we drive our cars? And so I would say we're right in the borderline, somewhere probably between 6 and 7 years. We are a little bit less than what most people were in the survey. It looks like 84% of financial mutants drive their cars for longer than 7 years. We drive ours for about 5 and 6 years. One reason it's a little bit lower is the depreciation for the LLC. And so usually I'll buy a truck under the LLC, the rental property LLC, and I'm able to write that truck off over 5 years. And so at the end of 5 years, it depends. If it's going to cost me $20,000 or $30,000 for a new truck, then I'll just hang on to it for a couple more years and just lose that depreciation. If it's something that's going to cost me maybe $10,000 to get the next truck, and I can write off $10,000 a year worth of the truck, then I may go ahead and purchase it, and that's what I did in 2022. And so I'm on year 3 of depreciation for that truck there. For our other vehicles, we did have a 2013 Honda Civic that we sold this year, so that's about 12 years. And then we had a 2018 Honda Civic. I maybe said Honda Civic the first one. Honda Fit was the first one, and Honda Civic is the second one. We had it for exactly 7 years. So that's why I'm saying we're probably somewhere around 6 to 7 years on most of our cars. How much do you put as a down payment on your first house? So it says that 78% of Abound Wealth clients put less than 20% down on their first home. I am definitely in an anomaly for this one. If you go back all the way, oh goodness, to 2014, 2015 videos, you'll see a thumbnail there with a white house on the front. That is actually a house that I purchased. It was my first home, and I actually paid cash for the house. It was an $8,000 house. So a little bit abnormal, I would say. Most people do not pay cash for a house, and also most people probably can't find $8,000 houses. This one was listed at, I believe, 50,000, and I did get it for $8,000, and then sold it about a year later. So, I would say, other than that, really the second or the third, probably the third house was the first official like move-in ready house that my girlfriend wife now moved into, and we did put 20% down on that house. So it looks like the vast majority of people are putting less than 5% down. I am also a real estate agent. I would say that is definitely true. Especially people who are not watching the Money Guy show on YouTube, definitely more than 30% are putting less than 5% down, which makes it very difficult to purchase a house and make the monthly payments work there. So, savings rate, 43% of Abound clients save more than 25% per month or per year, whichever it is. And we are definitely in there as well. As I said, we spend about probably $5,000 to $6,000 a month, sometimes $7,000 or $8,000 a month. And right now, our average take-home pay is $22,000 after tax, after 401k, after everything. So personally, I'm a bit confused on savings rate. Do you add in the employer match in there? Do you add in your 401k and your HSA contributions? Do you add in, the principal pay down that you did on your house, stuff like that? So there's so much that goes into it, but I will safely say that we are definitely above a 50% savings rate. You'll see here in a minute, we're paying off our house about $120,000 a year worth of principal. And if I make about 240, 250,000 gross, then, and we're putting a lot in 401k, I think we're probably at 60, 65% savings rate with about a 270, maybe $300,000 income. So median household net worth, last couple things here, and we'll move on to income and then net worth. So net worth of the average American right now, so I am 31 years old, so average net worth of somebody between 30 and 39 is 91,000. Looks like 25,000 for the 20-year-olds, 185,000 for the 40-year-olds, 300,000 for 50-year-olds, and 384,000 for our 60-year-olds. So next is, what is the median net worth of our financial mutants of the Money Guy show? And it looks like for 20-year-olds, 185,000, which is way above the $25,000 for average. For my age group, it's 650,000 for financial mutants, and I am knocking on the door of 2 million right now. So we're about 3 financial mutants compared to the average. So that is amazing. Happy to see that, and it's reassuring too. There's a lot of negative stuff out there on the news, and I will say, times are very difficult with housing prices and income and trying to find jobs, but there's so much negative stuff out there. But this is a testament that there are a lot of people here in America that are doing pretty well. To have this many 30-year-olds that have over $500,000 net worth, I think I try to be an optimistic person, but I think if you can take control of your life and make the difficult decisions, sacrifice today so that you can have a better tomorrow. I still think you can definitely do that in America. It is becoming harder and harder, but it's still definitely a possibility for a lot of people. It looks like 1.3 million for our 40-year-olds, 2.3 for our 50-year-olds, and 2.8 for our 60-year-olds. So it looks like I'm almost in this 50-year-old category here with almost 2 million at 31. So yeah, just wanted to run through some of that. Again, I was just one of the people that filled out the survey, so thought that would be interesting just to see how I compare to some other people here in America. So okay, jumping into income here. So income for October was 21,000, not quite 21,000, but pretty close. This was a 3 paycheck month, so I did get paid last Friday on October 31st. So I will get 4 more paychecks throughout the end of the year, which should be another 28,000. So it looks like I should make somewhere around 245,000 roughly at the end of the year for gross income, which will tie what I made back here in 2023. I do have very good news as well. So for March of 2026, it's looking like we're going to get a pretty big bonus again at work. Probably not as big as it was this year. This was about 60,000, 62,000 roughly, somewhere in there. I'm estimating next year's bonus will probably be 52, 53,000, which is still very, very good. They'll take a lot of that in taxes, of course, but that is good that it's looking good for 2026 for our company. So again, I've worked in pharmaceuticals now for 12 years. I work at a very large pharmaceutical company in the state that I live in. I'm in a very, very comfortable position with them. I enjoy the company a lot, which is crazy to say. If you would have asked me that for the past 12 or 13 years, I would have told you how much I hate my job. But um, yeah, you just, like I said earlier, you keep striving for better things, and you move to better places, and you get more pay, more bonuses, more benefits, and some better work-life balance over time. So definitely doing much better now than what I have been for the past 10 years or so. But right now, I'm just putting in 6% to the 401k. That is what the company matches. I am maxing out the HSA at like 8,000 something dollars a year. I plan to max that out again next year. Insurance is about $350 to $500 a month. I do have some benefits at my work too. I do sell some of my vacation days to help offset some of the insurance costs. So I'm able to make maybe $5,000 or $6,000 more a year by sacrificing a week of my vacation. So take home pay $14,000 for my wife. Same story for her. She's just doing some adjunct teaching, probably 4 to 5 hours a week. And so she had 3 paychecks that came in October as well. So she made $2,000 and took home $1,700 and rental property. So this is the big one. This is one I've been focusing on a lot for the past 30, 45 days. Well, it's really been almost 60 days now. September 7th is when the tenant moved out. So we're down to one rental property that is occupied right now, and then one is vacant. I am taking the opportunity. Both of these have been rented for 5 years. The first one, she is going to renew for another year, so that'll be 60 years for that first one. So that one's rented at $13.50 per month. The second one was at $11.75 per month. And honestly, our rents for both of these are way below where they should be. They probably should be around 1,800 a month, and we're at 1350 and 1175. So I've taken these past 2 months, and on the second rental property, the one that was at 1175, I've replaced carpet, I've painted ceilings, I've painted walls, I've filled in any imperfections in the drywall. I've redone trim in the house. I redid the cabinets in the house. I did some outside painting and touch-up kind of stuff. I completely tore out the bathroom. I put a whole new shower in there, brand new floors, new toilet, new vanity, new sink, new faucets, new spigots, shower head, everything. I've shiplapped one of the walls, and yeah, painted the whole entire house from head to toe. So all in all, I've spent about $5,000 for doing all of that, which is really not that bad. However, it's just the time for me. I am spending every Saturday and Sunday over there right now, either painting or wrapping stuff up, and I am happy to say I have probably one more day over there. And we do have some people lined up as well. I've taken some people on some tours. We are renting this at $1,500 per month. However, it is a little bit more than that. Previously, we were paying some of the water bills and stuff. So water is like $120 a month for these two rental properties. So water will move back into the tenant's name, and so, or the new tenant's name, I guess. And so that's essentially like it's renting for 1,600 for us. So moving basically $400 more per month will be what this place will make, which is good, which is still well below what the market rent is for the area. So it's a good deal for somebody that's out there. It's a completely remodeled house now, so I've probably honestly added $20,000 or $30,000 in house value, especially with the bathroom. The bathroom needed some TLC for a long time. So, um, but in extra income, I made $600 on Friday, and then I made an extra 200 plus 360. I made an extra 560 on like November 1st, so I went ahead and updated that. But gross, this was all from firewood as well. Yeah, I'm selling firewood for about 120 for a face cord or a rick or whatever you want to call it, or 360 per cord. So I had maybe 15 thirds of a cord face cords, or what would that be, 5 cords that I had split and seasoned. So I got all that sold, and yeah, so I don't have to worry about that coming soon. Gross income for the month, $25,000. Take home pay was $18,000 for the month. So hopefully next month I'm able to show a deposit and some extra income coming in for the rental properties. Um, Last couple things here. So throughout the end of the year, I do have a few more listings with real estate that I am hoping are going to sell anytime in the next couple months. One of them is contingent. We just need a first right contingency to drop on that one. So yeah, hopefully that's an extra 2 or 3 thousand that'll come in the next couple months. But just to look at the whole year, I've made 217,000 this year. My wife has made 9,000. Our rental properties have made 23,000. I've made 49,000 in extra income. This is stuff like being a real estate agent. I did some invasive species stuff, which I'll have one more year of in 2026. So I did make probably 8 or 9,000 with the invasive species. I did get a little bit of a tax return. I've been doing odd jobs and things like that. So yeah, I made $49,000 just doing part-time stuff this year, plus the rental property stuff, which is $71,000 for the year. And then looking at the median take-home pay, so it looks like my average take-home pay is $22,000 a year, and gross pay is about $29,000. So we're paying about $8,000 a month in either taxes or 401k or things like that. Last couple things here. This may be a bit of a longer video. I'm rambling on a little bit, but this is just the gross income that my family has made for our entire life. And these are kind of goals that I will shoot for my net worth. So the first goal was just total take-home pay. So total take-home pay I've made in my entire life since I turned 18 years old is 1.6 million. This number here, 2.035 million, is everything I've made take-home pay plus any kind of 401k, HSA, stuff like that. And then I've not quite hit this goal yet, but this is kind of goal number two. Like this is an ever moving goal as well. So you can see like as I add in, like if I add in $1,000 for my wife here next month, that goal moves up to 2.036 million. So it's kind of the goal continues to move forward, but eventually my thought was as income and investments compound, as real estate appreciates, then hopefully that appreciation and that compounding will eventually cross this number. So I've been approaching on it. I'm within 100,000 now, so yeah, hopefully soon we're able to pass that. And goal number three is to pass this 2.4 million. I'm still a ways away on that one, but that is essentially it for income for October. Jumping into net worth though. So not a bunch changed from last month. There are some updates, but we had some pluses, we had some negatives. So property first of all. So I have four main properties. I just have these appreciating at 2% per year. So it takes that 2% per year and divides it by 12. So this is just an automated formula. So everything goes up just a little bit. It's about $2,000 to $3,000 a month I receive in appreciation. Once in a while, I will adjust these if they're way behind, and right now they're probably okay. I honestly have no idea what house number five is probably worth 240. House number seven is probably 220, 225, 230, somewhere in there. So I'm really close on these. I try to be conservative, and actually, I did want to pause as well. I did get some what I'll call constructive comments in the last video. I think we passed a milestone for the channel. We did get our first hate comment, which is fantastic to see. The person did actually watch the entire video, which is amazing. So their constructive criticism was that my net worth really should be around 400,000, which I don't quite understand, but I did want to explain how I calculate my net worth because it is a bit different than other people, but I would argue that the way I calculate my net worth is by far the most consistent out of anything else that I've ever seen so far. So what I do is I take the current value minus realtor costs of the real estate that I own. Some people will take the purchase price of their house, which to me doesn't really make sense because let's say I bought this house number five, for 110,000 6 years ago. But let's say I decided to sell that tomorrow. Well, I would sell that for probably 240. I would, probably pay half of the realtor fees, which is roughly 3%. So I'd lose $10,000 in realtor fees. So I'd probably make about 230,000. So what would happen though if I tracked it based off the purchase price? Is all of a sudden my net worth would jump up $120,000, which to me like doesn't really make sense of like because the money was always there in the house. Like you can look at like Zillow estimates or you can get a rough estimate of what your house is. my strategy, I take the actual appraised value of my house. I'll take off 3% for realtor fees, maybe 4% after closing costs, and that's the values that you see here. To me, that makes sense because no matter what decision, like I wanted my net worth to be as consistent as I possibly could make it, like long term. So every single month, no matter what my goal was, my net worth would be consistent. So if I decide next month, like I'm done with real estate, I'm going to go rent an apartment, I'm going to sell all four of these properties, well, I would get roughly the value that you see here. So my net worth wouldn't all of a sudden jump up $600,000 just because I made a decision to sell my real estate. So that's how I do it. That works for me. It makes things extremely consistent from a net worth perspective. So you're not seeing massive fluctuations. Real estate in my area tends to go up 2 to 5% per year. So that's exactly what I've got reflected here. It goes up 2% per year per house. And also, I'm probably way underestimating this one here, the house that I live in. This is probably 1.5 million. I probably would not sell my house for 1.5 million, to be honest. I have it valued at 1.2 million. But I'm always open to constructive criticism. So net for stocks, I don't know how to value stocks differently. They are worth just what they're worth. They're worth $731,000 this month. So not a whole lot of ambiguity for stocks. For debts, you definitely do have to take into account debts into your net worth equation. So I owe 630,000 in debt right now. It's all on four pieces of real estate. These four pieces of real estate here. Total, these are worth 1.6 million, and I owe 630,000. So I have just over $1 million in equity on these four houses. Again, I am taking that into account. So any debt that I owe, which that is everything, we don't have credit card debt, we don't have student loan debt, car loans, nothing like that. So it's just all 30-year fixed rate loans on real estate. But and then cash is cash. I just account for cash and add that as a positive asset. So basically, I take these three, 1.7 million, 730,000, and 62,000. So that is $254,000 is my total assets that I own, and then I subtract the debt from that, which is 1,912,000, which is the exact net worth figure that you see here. So again, that's just how I do it. The main thing is that you consistently track it every single month, and you do so in a consistent basis. If you don't want to count your cars into your net worth, that's perfectly fine. However, again, I would argue the same thing. If you decided to sell your car, like what my wife and I did earlier this year, we downsized to two cars or I guess to three cars instead of four. And so I didn't want my net worth to jump up $7,000. So I've just always consistently included some of that stuff. That way, if I did sell it, it didn't fluctuate my net worth crazy. So to jump back in here to the actual net worth numbers, I am really rambling on, I feel like, but total assets are 1.747 million. This is actually just property, so this is three vehicles, a couple trailers, just some big ticket things like mowers and things like that. I only have one mower and four houses, so all of that adds up to 1.7 million. For investments, I have HSA account, I have my account, my wife's account. That's at $91,000, so about $3,000 increase compared to last month. We are at all-time highs in this. I am contributing heavily to the HSA, and we're almost to six figures. So probably will be another year or so before we cross 100,000 in the HSA. My 401k did go down just a little bit this month, about 11,000. So that's maybe a 2% decline compared to last month. But again, nothing to fret about. So my wife's 401k went up about $1,000. So overall, we were down about $8,000 in our 401k. And again, this is just fluctuation as normal. I'm about to where I was. Well, I'm even higher than I was 2 months ago. So that's perfectly fine with me. Things are going to go up, things are going to go down. The main thing is you have a plan no matter what happens. If the market crashes 50%, do you have a plan for what you're going to do during that time frame? And I can say yes for my family and I. So if things crash 50, 60%, that would honestly be very good for the portfolio that I have laid out here. But I did get some comments in the last video as well. I mentioned I had sold my Google stock in September 2025, and I think I sold it at 260 a share roughly. And right now, 30 days later, it's at 280 a share. So maybe I can't even remember the saying for it, like diamond hands, or you hold your stock forever. Um, I would say, it's always a very personal situation with investing. So I had bought Google at like 140 or 150 back in April when it was, when the market crashed. Google was down 30 or 40%. And so I had gotten a 70% rate of return on Google in about 5 months. So for me, I was happy with that. So I went ahead and sold at the 260 mark and, just explaining why I do some of the things I do. The reason I did sell there too, Google definitely can keep going higher and higher. I will look at the intrinsic value of the company. I'll look at the PE ratio. I'll look at the balance sheet. I'll look at their earnings. And I do expect a 10 to 12% rate of return for a stock that I am purchasing with limited downside risk as well. So that was the decision why I decided, I can place my money in a better place than what I can, what Google could be offering right now. And just for an example as well, so I went ahead and calculated all of my returns that I have gotten over the past 11 years investing in the stock market. And this is why this will be a great example of why investing is so personal and why I sold Google. So over the past 11 years, 31, and so started investing probably about 20 in the stock market. So it's been 11 years now. My wife and I both have contributed $283,000 worth of our income to either 401ks, 403bs, or HSAs. So from that as well, our employers have matched us 82,000 of that 282,000. So add on 82,000 to that, and that is 366,000 that we have contributed to investment accounts. That is 100% of the money that you see here in investments. So I am at 731,000, almost 732,000 worth of investments, and I've contributed 365,000 of this. So on average, I am contributing $4,353 a month for 11 years now to get to this 731 worth of stocks. So if you do the math, 731,000 with a contribution of 365,000 over the past 11 years, I would need to, and that is with my employer contributions as well. So I'm not shying away from some of that did come from employers. So the average return for our stock portfolio over the last 11 years has been 18.3%. If you don't count employer contributions, it's 34%. But for me, I feel like they absolutely must be counted because they are truly contributions. So an 18.3% growth rate for 11 years now. So that is average. There were some years where we were getting 50, 60, 75, one year even 100% rate of return in stocks. And we've had maybe one or so years where it's been negative. And again, I'm in an extremely conservative position right now for stocks. I would say 500,000 of this, maybe 400,000 of this is in money markets, making about 4% interest. And I have been in that kind of situation since probably January. I bought in a little bit in April and sold probably in June on some of that. But if you just go back to October, we were at 602,000 last October, and now we're at 732,000. So it's a $132,000 increase in the last 12 months. So the reason I say that is investing is so personal. Let's say my average return was, even or 2%. I maybe would have held on to Google for a longer term. For me, I've made 18.3% average. The S&P's, averaged about 15% over the past 11 years roughly. And so 3% over the S&P. I'm very thankful for that. And, sometimes you just shouldn't push the limits. And so that is why I'm so heavy in cash. If I lose out for a year or two while I'm waiting on opportunities to pop up, that's perfectly fine with me. Again, I've made 18% for the past 11 years. So I'm just thankful for what I have made. And as I see opportunities and good intrinsic value companies out there, I will purchase them and deploy some of the cash. And I have done that already. In the last month, I did purchase a very large chunk of the portfolio in a single stock. So yeah, so that kind of explains what I've done for the past year or two, or definitely for the past couple months. So yeah, 732,000 in stocks. For debts, this is pretty boring. I'm making minimum payments on these top three because they're 30-year fixed rate loans at like 3% interest. So I'm not in a hurry to get those paid off. This bottom one though, the house that my wife and I live in, This one is the main goal. So if we do have a goal right now, it is to knock out this house payment. So this is maybe the house is maybe, I don't know, I would guess 900,000, maybe 950,000, or right around a million, somewhere in there. So we are down to 284. So you can see last month we owed 294. So I am down, yeah, almost 10,000. We put an extra $8,000 principal payment to the mortgage a couple days ago. And then we probably had, 1,800 of our payment goes to principal every month anyway. Our monthly payment's 2,813, and honestly, I am so ready for this to be over. Um, uh, we've been paying our house off now just for 3 years. We started at around 700,000. Now we're down to 284. This has been just consuming everything. So every bit of extra cash that we have just goes to paying this down. Really, the goal is essentially security. With less monthly expenses every single month, that's less money that you need to have in investments to keep your house afloat. So, a lot of people are losing their jobs right now. Amazon just announced that they're laying off 14,000. It could be 30,000. Target's laying off people. It's difficult to find a good high paying job with good benefits out there right now. So I think in terms of scenarios, like what can happen if I lose my job, to just jump back to income. My family, I make over two-thirds of the income for our family, in one way or another, just from my main W-2 income job. I do have some second forms of income, as I talked about earlier, but to lose two-thirds of my income is a giant risk. And if I have a house payment every month and I have a land payment, and those quickly can add up. And so these two together are about $4,500 a month worth of payments to get these, just to own what I own. And then plus you have utilities and all that kind of stuff. So it's probably 2,000 a month for utilities and groceries and things like that. And it's probably $4,500 a month for these two, this land and this property, or in this house. So really, if I can reduce that and get this down $3,000 a month, then my monthly expenses are basically $3,500 a month. And that is enough. If, again, to jump back to income, I can probably float that with just my wife's income and then what we make in rental property profit and just my odd jobs that I do, like selling firewood. So that's what's why I have the goal that I have right now, just to reduce some of the expenses. Fortunately, I've not ever had a layoff. I've never been laid off for the past 12 years. I started working at 18, and I've been 100% employed for probably more than 100. I have like four jobs, three jobs. So I've been over 100% employed for the past 12 years. But, you know, part of finances, are you planned for those rainy days? And if something does happen, do I want to be in a position where I've got to make some difficult decisions? So no, I would rather be play the conservative route. This will take me about 15 more months, is what I'm calculating, to get this paid off, and then now I can boom, I can save $3,000 more per month. And so really at that point, it'll be buying real estate. So I'll either make the decision to pay off these three properties up here, or I will purchase properties in cash. Depending what interest rates do too. You have to take into the current climate of finances, and if interest rates go back down to 3% and I can find 15% cash on cash return in real estate, then I will probably do that and put 20% down and still be somewhat conservative. If interest rates stay around the 6.2% that they're at right now on a 30-year fixed, then I'll probably just pay cash, honestly, because there's a lot of good deals that are popping up. It's just I don't want to finance them at 6.2% at the moment. So um, that is kind of why I have the goal that I have. And again, we're about 15 months away from getting this paid off. So cash is a bit different this month. So I went ahead and made that $8,000 principal payment to this house on like October 29th, October 30th. Since then, I have made about $1,000 just selling firewood. So I have that in my account. So normally I would just hover this account at 40,000. Again, this is probably a 9-month emergency fund. If we spend 6,000 a year, 6,000 times what, six would be 36,000. So it's like a 7-month emergency fund, $40,000. Plus we have the rental checkings account. This one is taking a beating. So as I mentioned way earlier in the video, I've spent probably $5,000 to $6,000 fixing this house up. I am completely done. I have no more expenses. Honestly, I have a few things that I need to take back to the store. So yeah, so we're completely done. So we're at 22,000. Some of this is just, I mean, it's from being negative. I still have to pay both of the mortgages, which are 750 a month, but I'm only bringing in 1350 a month from the one rental property. So I'm already negative just based off paying the mortgages. Then I have to pay gas bills, trash bills, water bills, taxes, insurance, all that kind of stuff. So I'm maybe, with just one of these, I'm probably negative $300 or $400 a month, with just one of them rented. But this is, again, guys, this is why, you really just have to be careful. If I had this account, if I had no cash saved up and I had $5,000 or $1,000, like this would be a catastrophe. Just having one rental property rented. But now, for me, it's really nothing. Like it's went down. What was that? 6,000 compared to last month. I paid for the shower install. I've paid for the carpet. I paid for all the material with everything else. But it's really no big deal. We'll get the deposit, $1,500, if not more than that. We'll get the first month's rent, $1,500. So that'll be 3,000 that instantly goes back in here. But just having a cash cushion gives you some flexibility to like breathe a little bit. I'm not having sleepless nights over that whatsoever. But if I had $1,000 in cash saved up and I'm I'm only having one rental property rented at a time, I'm probably not able to sleep at night in that kind of scenario. But just having 62,000 in cash to where I can still breathe a little bit and actually get this place remodeled the way that it needs to be remodeled to make $1,500 a month. Yeah, that is exactly why you have a cash cushion. So hopefully next month when I report back at the end of November and early December, I will have this back up to maybe 24 to 25,000. So and have a renter in there and some income coming in. So now that I've rambled on for 36 minutes, net worth at the end of October is 1,912,000. So basically flat compared to last month. We had a maybe $1,000 gain over the last month, and it was mainly just because of stocks. Stocks dipped maybe 8,000, and then however the debt also dropped off a lot as well. So the expensive time should be over and I should be back on track. Well, I say that, and I have property taxes that are $5,000 that are due here in 7 days. So November might be a wash as well, but December hopefully will be a good month. I don't think I'm going to hit the $2 million mark in December, but nevertheless, I am making progress towards the goal on multiple fronts. We're paying down debt. We are increasing our net worth. We're getting close to the $2 million mark. And if if you made it 37 minutes into the video for the end here, please comment down below. Whatever you want, ask a question. Give your opinion on something. I do appreciate all the comments. Most comments are positive. Once in a while, I do get a negative one, and I do appreciate both of them. So that means that you're watching the video. So thank you all, and be sure to like, comment, subscribe, and we will see you in the next video.